Alicia, take it away. Hi. All right, I am passing out two different things. Take one of each, please. So one of the things that we've never talked about in the group and seems to come up rather often, I get probably one call or email on this topic a week. So I know that people are thinking about it, and I want to just give a little educational presentation today on what it means to be an employee versus what it means to be an independent contractor. Most of you here are independent contractors or you own your own business. But what we don't think about is the impact to the people that work for us, whether they should be an employee or whether they should be an independent contractor. The reason that this falls under my scope of knowledge and skills is employment law falls hand in hand with tax law. Usually if there is an issue, it's going to be brought to you by the Department of Labor or the IRS. And both of those things end up being a tax at the end of the day, whether it's FUTA, SUTA, or your payroll taxes. So I have defended numerous audits and inquiries in the area of employment disputes and classification of employees. So there should be just a little sheet that actually came from the IRS on the differences between an employee and an independent contractor going around. And then just a little handout from me. And I'm not going to read off of it because I think that's really boring, but just some of the highlights. So usually, comes into question whether an employee is an independent contractor or an employee comes into question either when that individual starts to work for you or perhaps later on down the road when they figure out that they should have been one versus the other when they go to file their taxes. So when somebody's an independent contractor, you give them a 1099 at the end of the year. You're not withholding taxes, you're not doing anything for them other than giving them a piece of paper and saying, here's how much I paid you. When you're an employee, when you're an employer, and that person is an employee, you're withholding taxes, sending that to the government, and then they get a W-2 at the end of the year, which makes their taxes really easy. So when I've seen issues come up, it's when people do not realize the difference between an employee and an independent contractor and don't realize that they are being classified as an independent contractor. They go in to get their taxes done or try to do them themselves and realize that they have to pay a lot more taxes. The reality is that if you are self-employed, you are paying your own Social Security and Medicare tax. But the benefit is that you get to write off a bunch of things against that income. So a lot of times at the end of the day, if you are an independent contractor, overall, you may potentially pay even less taxes. It just comes down to the timing of it and the mechanism for getting those taxes into the system. So a couple things I just want to highlight on these handouts is that the biggest factors that either the federal government or the state or local agency is going to look at comes down to control. And you'll see that I've highlighted the different factors that the different agencies look at. So we've got Federal Department of Labor, we've got the EEOC, which is the Equal Employment Opportunity Commission. Sometimes they get involved if there's an issue. We've got Colorado Department of Labor, and then we have the IRS. Each of those different agencies has their own different criteria. And it is entirely possible, and I've actually seen this happen in some of the audits that I've done, is that the Department of Labor, Colorado Department of Labor, may decide that one or two or even all of your contractors are in fact employees. But there's no mechanism in place for the federal government to know that. And so the state has decided that they're employees and they're going to charge you unemployment insurance on those employees, but it's possible the IRS never gets involved. I've also seen it with the IRS, where the IRS has reclassified individuals as employees versus independent contractors, and somehow the state didn't get notified. So according to the eyes of one agency, people could be employees. In the eyes of another, they could not. So it really just depends on what your situation is, who you're working with, and what your different risk factors are. So when somebody calls me or comes in, we have a discussion about whether somebody's an employee or not. The first thing we talk about is level of control. And that means, are you dictating when this person comes in and does the work? Do you tell them where to go? Do you tell them how to do it? How much control do you actually have over the time that they spend doing it and the final product? The more control you have, the more likely it is that they are an employee. If you have no control and you simply say, I need this job done, here's a deadline, do whatever you need to do to finish this project, and you get paid either by the hour or for the finished project, then they're an independent contractor. And those are the two very clear sides, one versus the other, but then there's everybody else in between, and we have to look at the different factors and see whether or not it makes sense for them to be one versus the other. From an employer standpoint, we save money as an employer to have people as independent contractors. We're not paying their employment taxes, we're not paying workers' comp, we're not paying unemployment insurance, we don't have to pay benefits. And if they are out and get hurt while they're doing the work, we're not responsible for covering damages. If they're an employee, it's the exact opposite. We're paying our half of employment taxes, we're covering them on our workers' comp, paying into unemployment insurance on their behalf, and if they get hurt on the job, we're responsible. So after the economic downturn, we saw a lot of employers just dumping employees, and very, very common, just converting everybody across the board to independent contractors. That triggered a lot of audits, triggered some changes from the government, which I put in here in the updates in the recent case law. And so there was this really big crackdown on employers to make sure that they were classifying their employees correctly. As a result of that crackdown, we started to see a lot more individuals going away from the traditional employment environment, setting up their own businesses. They wanted the ability to work from home, they wanted to set their own hours, all these things, which is fantastic, but it means that they're now small business owners, they're responsible for their own taxes, and no longer under the control of that former employer. So that was a big shift that we saw, and I'm helping a lot of the small business owners that have come out of this shift kind of, get their stuff together and keep their books and records and learn how to file their taxes appropriately, and also not hurt themselves from being able to get financing and health insurance and all of that. So one of the big changes that we have this year with tax reform is that employees are no longer able to write off their out-of-pocket expenses. So if you previously, if you had a W-2 job and you're writing off your mileage and your cell phone and a home office and all these things, under tax reform, you can no longer do that. So what the government was trying to do was put more responsibility and accountability back on the employer to reimburse for those costs. And that way the employer gets to write them off instead of the employee having to do it. There's been a lot of backlash on this, and I think that we're going to see even more employers drop employees and convert to independent contractors. I like being an independent contractor. I think that being a small business owner it puts the onus on you to get out there and do the work and to be responsible, and you're compensated based on what you produce versus just sitting there and getting a salary. So I'm a big proponent of that. Not everybody is fit to be self-employed though. I can tell you that from seeing people come into my office. I'm like, you have no business having your own business. You're going to get a regular job. And I'm not afraid to tell people that. Yes. So I think that as a result of tax reform, I am going to see even more employers kick their employees out the door and convert them to contractors. And I think you're going to see a lot more employees willingly do that because now they can write off things that they weren't able to write off before. So anyway, I think I've gone over a lot of that stuff. Let me see if there's anything else here that I wanted to point out. I've got one sheet in here on employee leasing companies. I don't think anybody in this room has that. But if you're in construction or you're in a field where maybe you have a high workers' comp risk rate, or you have high unemployment, or perhaps you're not very good at hiring people that are allowed to work in the U.S., you would move into an employee leasing situation where you put the onus on the other outside third party to do your screening, to hire those employees, to handle benefits, taxes, and you get pulled into their workers' comp rate and their unemployment insurance rate. So there have been some companies that I've worked with where that's how we get them out of tax trouble, is to shift their employees from them being their employees into an employee leasing situation. So, little nifty things that we can do. And does Paychex do PEOs?
Yes.
Okay.
Yes,
right,
absolutely.
So there are several companies out there that do it, and there's a reason to do it.
But the rest of them suck. You want to use Paychex.
Yes. Paychex
That's true.
So there's that. If you do have concerns over whether your pool of staff should be contractors or employees, an employee leasing situation might be a good way to go. And if you do have individuals that are working for you that are kind of in that gray area and you want them treated as independent contractors, you must have an agreement with them. You should have an agreement with them. It's not required by law, but one of the factors in determining whether or not they are a true independent contractor comes down to consent and whether everybody involved in that agreement actually understands why they are there and the ramifications. So, thank you so much. Sorry, I lost my train of thought there. Anyway, so if you're in a situation where you think it's gray, definitely have a written contract. And there is special language that Colorado Department of Labor would really like you to have in that agreement that basically has that person sign away all of their rights to fight the fact that they are not an employee. So you want them to sign their life away. The contract is not 100% bulletproof, but it is one of the major factors, and it should cover all of the things like, do you consent to do this? Do you understand the ramifications? You're going to be filing your own taxes, et cetera, et cetera. So, and any attorney can draw that up for you, including Chris or Keith.
Actually, not Chris.
Chris doesn't do this. All right, we'll send those to Keith or Allison.
All right, so we have time for maybe one or two quick questions.
All right, sorry I talked your ears off.
I have a question for you. So I have two employees, and really, they're on the fence on which way to go.
Okay.
And I'm willing to do either.
Okay. What do they want to do?
Well, again, they're on the fence. What are the 3 or 4 biggest things that you can literally write off if you're a lawyer or a paralegal? What is it?
In the legal field,
what you
it's
mentioned,
going to be
mileage, cell phone, and home office?
Mileage, cell phone, home office are going to be the 3 big ones. Also, any training, education, any professional development that you do to hone your craft, licensing, anything tech, really, we can get away with. So if you've got a computer at home that you're using for work, even though it's not dedicated 100%, we can still get away with writing off that computer, the internet, the software, all of that stuff. So there's a lot that we can leak out of your financial records.
And if I sent them over to you, Are they looking at $1,000 a year for your help, or are they looking at less? Or?
Usually less. I do have some individuals that are at that level, but most of my self-employment returns are between $400 and $600 a year. And that includes any time and meetings and phone calls. You're getting a product, not paying by the minute.
Those are great
So,
rates. Really, really competitive.
Yeah, I've been talking to him about it.
What about writing off travel?
It has to be business related. So if you have a trip that you would like to go on, find a reason within your business to go there. So maybe there's an educational event that you can go to. Maybe you can go network with some colleagues or drum up some business. But find a reason to be in that place that you want to go on vacation at anyway. And document, document, document. So I've done really great in audits using Facebook. So I've been able to document business purpose and travel and why was this person there by using somebody's Facebook timeline.
All right, well, thank you, Alicia. That was great.